Hello everyone and welcome to today's Stocks and Crypto YouTube Charts video. I am NoFOMO Charts. Today is May 1st, 2026. It's about 10:30 p.m. Eastern Standard Time here at night in the USA. Welcome everyone. This is a swing trading and investing YouTube Charts channel. This upcoming week we have more stock earnings. More earnings. Big tech has passed last week mostly. This upcoming week we have earnings from Palantir, AMD, MSTR, Tempest AI, McDonald's, Disney, Coinbase, CRWV, Iran, Open Door, just to name a few. There's some food companies in here as well, some oil companies, gas oil. Economic data, we have job openings, new home sales, unemployment claims, unemployment rate, consumer sentiment, and inflation expectations as well. Recent news from last week. Stock market earnings season continues. President Trump reportedly stated that the USA might need to renew its war with Iran due to stalling negotiations over the Strait of Hormuz, specifically the nuclear program in question. President Trump also announced to raise EU auto tariffs up to 25%. He also signed an order to allow cross-border oil and gas pipeline delivery between the USA and Canada. The USA Federal Reserve and Chairman Powell's last day as the FOMC chairman held interest rates steady and signaled potentially lower interest rate cuts, fewer interest rate cuts for 2026. He will stay on as a governor of the FOMC. Most big tech companies had good reported earnings last week: Google, Apple, Amazon, and Microsoft as well. Now, chart events that I don't always post all the time, and I try to be efficient and accurate with my chart events. But this week, just because of all the volatility, I'm just writing it here. So SPY, QQQ, DIA index ETFs just paused below R1 pivot point, rejection. Gold and silver also below a pivot point, resistance, but the stochastic RSI is 20, so it's oversold. I'll show all of these. US oil and natural gas, they're actually opposites. Oil's overbought. Natural gas has some bullish momentum forming on a daily chart. Crypto, total market cap actually is good. We bounced above the 20 EMA with stock correlations. Same with Bitcoin, price bounced above 20 EMA. Now it's a resistance price test again. If stock market's good, sometimes Bitcoin just follows. Ethereum price bounced up above the 50 EMA and pivot point. Stochastic RSI is oversold. Now these are interesting down here. These are 5 smaller name. These are definitely laggards, lagging stock plays and ideas, because if big tech, Magnificent Seven, AI stocks, oil and gas stocks, ETFs, gold, silver, even Bitcoin itself have all rallied, there are fewer stocks and ETFs left to actually go up. But I'm just going to announce them here just because they showed up on my scanner. XLY, ARKK, CoreWeave, GameStop, and MSOS, surprisingly, they all had golden crosses up, 50 EMA, above 200 EMA, and we'll take a look at those at the end quickly. Those are maybe plays, because if we have a big pullback, maybe it's going to pull back first, but it's worth noting because golden crosses can be real, especially on some of those names with fundamental changes. Let's begin. SPY, SPY, S&P 500 ETF. We had a wonderful rally for 30 days straight. It's pretty amazing. Upside down head and shoulders, broke the neckline, gapped up above EMAs, and rallied nonstop off of AI hype, short squeeze, and positive earnings. Now, one thing that I noticed is my linear regression, the price is not above the Bollinger Band up here, but it is above the upper linear regression line, which means that some algorithms might be trying to take some profit like Friday. We are still in the uptrend. If we Fibonacci this entire sequence leg, this may or may not be the top. We just got rejected below R1 pivot point. If we go intraday, the 4 hour is still golden cross, so that's still good. The 1 hour is still golden crossed as well. We'll know we're in trouble when at least the 1 hour price chart starts downtrending or 15-minute death crosses. Then we have a problem. It's still golden crossed on 3 or 4 major time frames. So we're still okay for now. I'm just expecting a pullback because unless earnings takes us higher, that's why I cannot only rely on the technicals. So resistance at 725, support at 719. I can mark these spots. Big support down here at 710. That's what I'm watching out for. Investor weekly chart, it is not extreme. It's just one bullish piercing, almost a gap up. If we went sideways like we did back in late 2025 to early 26, that's why I was calling that bearish crash. That's not the same chart that we're having right now. So I have to just relax. Sometimes we get a week of red or a week of red selling. But if we ever touch EMA or support, we could keep bouncing up here. Nasdaq is slightly different, obviously, with all this tech AI hype. Yes, we are in this massive uptrend above the linear regression up here. It would be interesting to just put up a anchored VWAP from this low, just to see where we are. Turn off all the EMA so people can see. Well above anchored VWAP, above the first deviation, squeezing between the first and second deviation. So as long as if we stay in this double channel, then the uptrend can resume. If it ever gets really, really overextended, then we're going to have that pullback to the downside. It's just warning sign that linear regression is above, but this can continue rallying and angling up the linear regression. So I need to see something really, really extreme to call it bearish. And so remember that I was saying we might have little 1% pullbacks, but this is not time to do massive shorting, in my opinion, in terms of like all-in YOLO shorting. That's not probably not this exact moment in time because AI is so bullish right now with the CapEx spending. Yes, we have the stochastic RSI is overbought and the RSI is high, but on the weekly chart, it's not quite overbought yet, and we don't have a larger pattern. So it's still probably going to rally with smaller pullbacks. Do one more. Dow Jones ETF. Remember, this is good that back in late March, early April, when I'm questioning this bottom spot, that's still a good entry spot. I think in hindsight, if I could rewind my own trading with here in bar replay or market replay, instead of question mark, it would have been better for me personally to actually play DIA ETF. I traded other things, had profit, but I'm just saying sometimes instead of question mark, it's good for me to just put maybe like a small to medium sized position because technically sometimes our minds can override what I'm actually seeing with my eyes on the chart. When I draw those two trend lines and it's like a textbook breakout when it's downtrending and then you make a higher low and then but bears got squeezed out. So now it's approaching that upper resistance zone, which is wonderful. As long as we can stay above this pivot point, 485, should be good to maintain the uptrend. But 500 resistance needs to be broken to the upside at some point. It's just not a clear, it's not a clear, perfect uptrend because we had a just textbook downtrend and this is kind of ugly. It's volatile. So I just want to watch out for this potential double top right below 500 that we're not actually going to pull back severely. I always operate with 3 or 4 scenarios. So worst case scenario or bad case scenario, really bad, is we pull all the way back down, have a flash crash, like a long squeeze, and then 450 support. That's scenario 1 for me, bearish. Scenario 2 could be if there's any bad earnings, maybe we'll come down to here, 476 in terms of support level. Realistic scenario 3, it's probably going to stay above this 485 unless something really bad happens. And then scenario 4 is we just keep bull breakout for the rest of the year, which is still possible. So that's why I need to just remain open-minded, don't become too biased, because all that volatility that happened February, March is actually technically over. It's just really, the markets love to move. Volatile. That's all I could say. There's a lot of market participants and money flowing around. Let's go to oil because we're talking about that news earlier. Now, what I want to point out here on this chart is, yes, on a daily, it looks quite ugly, the price action. If I switch to a weekly chart, it makes sense to me. It makes sense to me because if I draw this trend line, draw this support trend line, also in a weekly chart, I see this upside down head and shoulders, neckline, clear multi-year resistance trend line. I can measure that from the bottom to the top. That's 25 to 50% target. First target would have been $100. Second target, 120. Third target should be 75%, which we just tapped. Fourth target, 100%. So it makes sense to me. On the weekly chart, yes, this RSI is starting to set up for a bearish reversal. It's very early stage right now on a weekly. Usually if there's on the second double bounce of the RSI, that's the crash spot. And usually it goes wild up here. It's euphoric. Euphoria was the word I was looking for. It's euphoria, max euphoria, and you get a double RSI. That's the place to take some profit, or if the military conflict ends. But right now we're still in golden cross mode, and 4 hours still golden cross. Looks like stochastic RSI are interesting low opportunities to get into oil. I already traded oil, so I'm out of there. Natural gas I'm a little more interested in. It doesn't have the exact same correlations with oil or gasoline itself. But natural gas, what I do like to see here is this support level at 10.15. I like that. Bullish momentum, I also like that. And then there's a little baby double bottom on the RSI. Okay, I like all of that. And a higher low on the stochastic. So this could short squeeze natural gas. This might be the third time. It might not go this high, but usually when that happens and we get some of that bullish momentum, we're getting it for the third time. So is this, unless the chart breaks bearish and crashes to $987, I might actually take a trade on this one, natural gas. Just keep in mind, natural gas does not respond to technicals really well. It responds to like squeezing momentum volatility or fundamental changes. I have to be very patient because some hedge funds or institutions, they love shorting natural gas ETF. Or their algorithms do it for them. Let's just go faster here. Let me end with these last 5. I just want to point out really quickly that XLY had a golden cross with low stochastic. I'm not going to go into the fundamentals of these. ARKK had a golden cross with a kind of above oversold stochastic RSI. It's just like a correlation play. CRWV has earnings coming up in the end of this week or next week. So it's on May 7th. So golden cross here, it could just be a correlation. So just watch out for that low stochastic RSI as well. It's just on my watch list. GameStop with the news here. I saw here on the news on the side that GameStop's reportedly trying to build a stake in eBay, the online retail reseller platform, and may take the offer directly to eBay shareholders. That interesting. That's what, the news, 6%. GameStop trying to become not only a video game store, but on the weekly chart, there's actually a setup here. I should point out that I didn't write on the document is there's the upside down head and shoulders on weekly. Left shoulder, head, right shoulder. We just broke out of that neckline. If we're going to rally the full pattern, it should go 28% to 36%. No, excuse me, 56%, 28 to 56%, basically 25 to 50%. It should go to about $30 to $38. So it might take 1 year or 2 years to get there. But if the CEO can turn around GameStop, that'd be interesting. It's been holding above $20. MSOS, controversial, but the cannabis ETF here in the USA. I'm just going to point out there is a golden cross there. But sometimes there's a golden cross, there's a rally, and then it fails. So this one may or may not work, but there was fundamental news change about this. Okay, let's go to crypto. Let's end here with some total Bitcoin, Ethereum, and some altcoins. So total crypto market cap, most recently, yes, we had that little flash pullback, but we held above this 20 EMA, which is 2.51 trillion, and our resistance is 2.61 trillion. There is this slanted head and shoulders here. If that would need to break below the neckline, which is 2.5 trillion. Let's just measure that just in case we have the bearish scenario in the back of our minds. So then the two bearish targets would be 2.42 and 2.3 trillion. These two targets on the downside, obviously the upside targets would be 2.7 and 2.8 trillion. But I do like that the lower support is still holding, and even the resistance, we didn't flash crash all the way down to this target, which is good. I'm hoping we have a surprise breakout. That would be nice for total. Because crypto has not been getting that as much love. When you go to a stock like AMD or Intel, which went almost 80, 90, almost 100% in 30 days, and then you flip back to Bitcoin chart, Bitcoin's not getting that much love. It's getting a little bit of love in terms of bulls buying is 20%, but that's nowhere near the 80% of AMD and Intel. But if I draw Fibonacci, bottom to top, we are still in this death cross, still. Lower low, lower high, lower low, lower high. So we need to not crash below 70,000 for the next 3 to 6 months. The danger here is that even though I'm long, and I've been saying it for almost like two or 3 months now, I'm still long in here, Bitcoin. What I do not want to see, and hopefully this doesn't happen, is we rally up and then something catastrophic happens in crypto world, crypto industry or Bitcoin, and we flash crash down to 50,000, 40, 30, 20. It's actually possible still. So I'm not going to get my hopes up that high. And I'm just trying to manage my own emotions myself and just hold longer. When we have a weekly Bitcoin double bottom, I try to hold that. Yes, you can flash crash down to 70,000. That's what I'm saying. We need to hold above 70,000 or 72,000. And if we pull back, and we don't crash, then I'm going to be really happy and excited about that, right? But I got in this range, which is good. So short-term resistance, we need to break above 80,000. That's the magical number. We need to not go below 75 in the short term and definitely not crash below 70,000 in the next couple of months. Ethereum, still surviving here. Ethereum, yes, in the longer term downtrend, lower low, LL, LH, lower high, LL, lower highs in progress. We're holding above that 50 EMA, holding above 2,200, and see if we can hold that higher low support to rally to my target of 2,600 or higher. Sometimes Ethereum crashed. Sometimes it happens, negative 60%, negative 70%. And then if there's a bullish reversal, it took 172 days, over half a year. It took us half a year just to get down to the negative 60% spot again. So if it's going to be the exact same or similar, 175 days should take us to August. We need to rally by August or October, September. Could be interesting to watch that, but we need to just make sure this bottom circle area, which is 2020, 100 to 2000, especially 2000 psychological, needs to hold in the price. Okay, let's flash do some altcoins. I'm just going to call out the price. So XRP Ripple holding above $1.35. See if it can actually complete this potential reversal pattern down here in a weekly chart. Would be nice to target $1.61 resistance, and then support is $1.30. Binance Coin on the daily chart still consolidating in a death cross. The only good thing is the stochastic RSI is low, so that's a slightly higher chance for a rally bounce. Solana as well. The weekly, the double bottom did not work out on Solana, but at least we're still consolidating sideways above $79 or $80. So $80 would be that psychological price in the sand. Tron, beautiful golden cross. Beautiful golden cross off that double bottom that I was pointing out to people. It's beautiful. Now, Doge coin. Remember 1 or 2 weeks ago I was saying Doge has some kind of momentum, and that actually turned out to be true. Weekly chart was showing that weekly momentum double bottom is a secret. So we're hitting that 11 cents. There's a large range here as an investor. It's 20%. So this is not an all-in play. It's a partial play, scale-in play that I might scale in more on Doge. But if I want to time it perfectly, which I don't advise, but actually none of this is financial advisement, but I don't advise that for myself, is that we're in a 4-hour upcross. That's been the name of the game. Find any 4-hour golden upcross, and then if it's an amazing stock or crypto, usually that's the one that's going up. So when I call golden cross and it's up here, sometimes it crashes back down and then we get low stochastic. That's the entry point. I get in way earlier though. My other cryptos I was in down here. But I'm just saying what needs to happen is we need to hold this 10 cents, try to get up to 12 cents on Doge. Cardano not getting that much love, consolidating to the side. Again, crypto is not popular right now. I would say prediction markets and tech AI stocks are much, much more popular, especially prediction markets, which I do not recommend prediction markets at all because I'm a technical analyst. I recommend charts and back testing and paper trading and bar replay, those 4. I recommend prediction markets if somebody can build a trading bot algorithm that has greater than 60% chance win rate in 15-minute, 1-hour trading. Very difficult to do that. Zcash USD. Golden Cross. Forgot to write about this, but Golden Cross on Zcash. Is this real? Is this going to be the real one? Because last time we had that, even though this project supposedly was canceled, we could get a higher high to 523 or 700. Possible. Because it doesn't want to go down for now. But it could go down to, it needs to hold above 300. If it holds about 300, we can break. If it breaks above 450, 400, that's going to be news. Horizon not feeling that love of Zcash, but could be a rounding price reversal down here. See if we could get that flash rally, not crash, flash bounce up to 725. Can it do it? Dash holding on to its 618 level down here. Just, yep, holding the 618, bouncing to 50%, trying to get that 382 up here. Up here, meaning $40, need to hold above 35. It's the same pattern. It's the same Bitcoin pattern. So unless Bitcoin goes to 80, 90, 100,000 plus, a lot of these altcoins are probably not going to rally unless it's a meme coin. And let's just end looking at some meme coin volatility. It's all the way down here at the bottom of my list. Hype also has a golden cross, but it's been very obvious for such a long time. I'll just point that out. But Pengu, right? Pengu had the double bottom and then rallied up. It's not a perfect entry spot right now because the stochastic is so high. So there's a correlation to a certain point where stochastic, when price crashes and the stochastic RSI is really low, and then I get a double bottom, higher low on the RSI. Hard to see, but there's double momentum on the MACD. That's kind of my strategy, one of my strategies. And then I just got to buy it, be brave, hold that, move my stop loss up, and take that profit, or have a profit stop loss in there. Pepe had a little bit of gains, 20%, not so popular. Pump. Well, interesting on Pump USD meme coin is that it's coiling the price. Found support above 0.001698. Stochastic down here, interesting. Momentum building, interesting. Double squeeze momentum histogram building. High low on the RSI. Pump might have a chance. Might have a chance here. I might have to buy some Pump, maybe. If Bitcoin rallies, that's the key. Now, the biggest one, meme coin that I saw over the past week was Ape. Went crazy here. Ape had a massive short squeeze, but I just want to decode this a little bit. That first, yes, Ape it's Ape coin, and it's a meme coin and it's not a tech stock, it's not an AI. I treat this more like a volatile penny coin, but what happened was a short squeeze. Ape has been in a downtrend on this Coinbase chart and the daily. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low on the price. And so it's making its lower high right now on the bounce. The entry, and I don't really recommend meme stocks. I recommend indexes and just like any other educational website. Actually, this is not a financial recommendation. I'm just saying that there's less volatility in indexes or in Magnificent 7. Because Ape USD, this thing went plus 150, 100% bottom to top in a month. So this is our volatile meme coin of the month. But how could somebody decode this? What's happening here? It's a lesson in bar replay and paper trading is that once the resistance breaks and there's a correlation to stock market, I'll use this, for example, multiple touch points on that resistance. And then you have a breakout, and then it goes from downtrend to consolidation sideways to an uptrend. That's very subtle. Also, RSI start to come out of this spot. So there's a spot right in the beginning of April that it's a learning experience, right? Somebody got this. Congrats. I was trading other things, successful still. But that 4-hour upcross, that's what I'm saying. The 4-hour golden upcross, if you know your technical charts, one of the secret indicators to give me some kind of signal that something's about to move. Same with the hourly golden cross. Get that up. And when it pulls back, it means on a 1 hour. When it pulls back on a 4-hour, that's my low stochastic entry, or I like to call it my EMA bounce. This thing is about to explode back here in April 21, 22. It's silent on the internet. Nobody really talks about it. But once you get that golden upcross, all the scanners are going to start firing off. Now, on the daily chart, I don't really like how this looks because it's gotten up here to 18 cents. It has a little bit of life left, but I would say for me, I'm going to stay away from this because if I don't catch that bottom, I don't want to play the top at all as a long because it could instantly flash crash down to 15 cents or even 11 cents and then just go back down to nothing. So it's just a lesson, I think, in price action, indicators, risk management, trade management. So to end this, I just want to point out to people that as a trader, I do not have to trade every single chart that I see on the chart, every single stock that I see, every single news that I see. Sometimes the best thing to do is just for me to be patient and wait for a setup to come to me, come to my charts, fill my criteria, become my strategy, and then buy and sell that. While I'm waiting on certain stocks and crypto, I need to do nothing. For some people, doing nothing is hard. So what I recommend for educational purposes is bar replay. Here, if you have a TradingView account, you could just rewind and rewatch the price action, or you could actually trade it, right? Like we're doing bar replay right now. and then it ended. It sold it for me already. And in this particular case, it's on triple speed. That went really fast. Let's just rewind this for a minute. Rewind to about here. So what I was doing here is just rewinding the bar replay. Play it, click trade, put in some paper position on. Right? This is not exactly how I do it, but right, it ended with $8,000 profit on a very large position. Very large position. Right? It's basically a $100,000 position. So it's really easy to practice like that. And it's also good, I would say, to practice actually making mistakes. Practice winning and also practice losing, practice making mistakes. For example, somebody probably took the opposite of that trade. Somebody was shorting APE USD probably globally and then got short squeezed out. So just rewind that. And let's just pretend somebody was in this trade and same thing, instead of buy, they thought it's going to keep going down, which was partially true until it wasn't anymore, right? Shorting down here is always dangerous. That's why even for SPY and QQQ, I was not telling people to short or sell at the bottom. I was saying we might have a reversal here. So here's a mistake people can make, is not putting stop loss, not putting risk management on either direction. Somebody could equally lose the $8,000 or 80%, right? So it's very, very risky trading, very risky. Discretional trading is very, very risky and very, very difficult. So that's why some algorithms out there that are algorithms or even AI for trading, they have 80%, 90% daily win rate. Humans have 90%, 95% daily loss rate in trading and investing. So that's why it's extremely dangerous to even take one step into trading without having all the practice, back testing, the win rate percentage, and risk management practiced and experienced. Even for myself, I can still make mistakes, right? The question is, can I recover from those mistakes? And the answer is, for me, it is yes. Just have to run my strategy and risk management. So there's a little bit of bar replay and education there at the end. Thank you so much for watching this video. If you like this video, go ahead and click subscribe. Click the like button. Share this video with your friends who might be interested in trading and investing. And I hope you have a nice weekend. I'll see you in the next video.